Well, ready for it or not, I am back. Here I am back in California. It turns out that one of the best reasons to have children is grandchildren. I happen to have 11, two of which have been born in the last 12 or so months. Well, yeah, both of those within 12 months. And I got a chance to meet one of those on this trip. So, I mean, I'm sorry for the rest of you. So, what about the stock market this morning? Well, you got Tesla down substantially right at the bell. That looks to me like some kind of major whale. Could be Kathy Wood. She's been selling Tesla stock for the last few days and moving money into other stocks. This is very normal for Kathy. I wish she would give us a warning, but I guess she can't do that. Anyway, I think that's what it's got to be. It has, there's nothing in the markets that would suggest that this should be happening. There's nothing in the news that I can find. The closest thing to anything of importance would be the lousy sales that are being reported from October pretty much around the world for Tesla, but we've known that for days and days and days. So I just don't think that caused a big sell-off at the bell. With a big sell-off at the bell, there's a good chance that people will be backfilling on that, starting to purchase at those bargain prices, and we might see a close in the green later today. We might not, but that's a very good possibility in that the rest of the market seems to be doing pretty well today. All right. What else do we know? I think that the text while you drive concept has legs. It's simple. It tells you everything you need to know. I think Tesla should jump on this the minute it is true and start hitting hard with the idea. So Elon, if you're listening, come on, man, we could do some major big time ads on that one. That could be a lot of fun. Gary Black says this morning, the next major catalyst for Tesla is the removal of the safety monitors in its 150 robotaxis. I don't know if there's 150 robotaxis, but I think there's 150 ready to go, which would signal an imminent scale up in which Elon has targeted in Austin for the end of the year. The latest FSD community tracking data shows miles per, here's the important part, miles per critical disengagement using FSD version 14 has soared to nearly 4,000 miles, 10 times higher than version 13 among the 11,000 people who are participating. That is a significant deal, even if we assume that the tracker is not a great, fantastic tool. It's the only tool we have. 10 times. So getting a trend line like that, though, to be 10 times less likely to engage is a significant deal. Top Gear. I don't know what happened at Top Gear this morning. They had two articles out about how amazing the Model Y is. They said, I'm not going to read you the whole article. The part that was important was bluntly, yes, the new Model Y is night and day better than the old one and genuinely feels like a completely different car. There's more attention being lavished on general rigidity, damping, and springs, better isolation and noise reduction. So the Model Y is quieter and more forgiving and exactly what you need from a family car. It's not the most precise of things to drive, but it feels more luxurious and expensive, all because it rides with greater sophistication and clonks through potholes less, if at all. Of course, if you're on FSD, maybe not at all. Investing.com this morning, analyst Adam Jonas told investors in a note that while the shareholder vote was the most important takeaway from the meeting last Thursday, several other developments could matter to the share price over the next 6 to 12 months. And I bring this up not because you don't already know it, but because this is me. This is exactly what I took away. So these were important. One key issue Morgan Stanley noted is Tesla's unresolved investment in xAI. They're going to have to revisit this, Jonas stated, adding that Tesla's relationship with xAI financially and strategically is deterministic to the long-term success of Tesla, due in part to the natural synergies of data, software, hardware, and manufacturing in recursive loops. I continue to be a big fan of this idea, maybe even bigger. Elon Musk has mentioned in the last few days that there might be coming together a confluence, some convergence, some kind of anyway, he's been talking about wanting to get the Tesla investors involved in SpaceX. I don't know what he's thinking. I don't know how it could be done. I don't have any even great suggestions right now, but I do believe that this is coming. Jonas next pointed to Musk's comments about full self-driving technology, saying that Musk claims that version 14.3 will allow drivers to text while driving. Drew loud applause. There you go. Morgan Stanley described the moment as significant, adding that the transferring the responsibility for safe operation of a vehicle from human to algo represents a steam engine moment for transportation. You can talk about sleeping in the back seat. You can talk about being able to, use the computer or just, talk to your friends. Something about text while driving legally is just got a real flair to it. Another focal point was said to be, according to Jonas, the suggestion that Tesla may need to build a gigantic chip fab. The bank noted that this move would ensure a realistic supply and continued innovation as Tesla seeks to vertically integrate production of the inference brain behind its robotics and AI platforms. In the book, AI Rising, which we just completed, which you need to buy, which you should buy, which for $2.99 you can get the Kindle version. I mean, come on. You're going to get $2.99 worth out of it. I promise you. If you don't, send me a note. Say, Randy, I bought it for $2.99 and I didn't get. In fact, if you buy it for $15.99 and you don't get $15.99 worth of value out of it, then please send me a note. 33, 34, 35. I forget. 5-star rating so far. One guy who didn't read the book gave it a 1 star. Every other rating, every other review is a 5-star rating. Finally, Jonas and the chip fab. Okay, let's go back to the chip fab here. That is part of the stack. That's half the book. We talk about how important it is to have ownership of the entire stack, and we lay out the stack and all of its details in a way that you can understand it. Believe me, if I can understand it, you can understand it. It's not that hard. And we made sure we really tried to make it something that everybody, what we used was we said, hey, we want this to be, this is Grok, but it doesn't need to be Grok. Word has had this for years. We want it to be understandable by a person with a high school education who has a lot of interest in the subject matter. So that's how we were trying to couch it the whole time. And so the chip fab is just one more piece of that. That's one more vertical integration where Tesla would have some control of all of the verticals, all of the elements of the vertical. And in this particular industry, I really believe that's part of the reason, half the reason we wrote the book was to talk about the stack. Anyway, finally, Jonas highlighted Musk's vision of a prodigious distributed inference cloud where idle Teslas could perform AI workloads. And I have been a big fan of this from the first time he ever mentioned it. Elon ever mentioned it. I think it's a fantastic idea. I'm ready. I'll be happy to turn over my idle time to the cloud, to this inference capability. The Morgan Stanley analyst believes that this could eventually involve tens of billions of Blackwell equivalent inference computers at the edge, forming a global network of swarming, distributed, low latency intelligence that doesn't require new cooling, doesn't require massive electrical. It's already done. Barron's has this morning. In October, Tesla sales fell 23% year over year in 4 markets: North America, Europe, China, and South Korea, according to industry data tracked by Wells Fargo analyst Colin Langdon. North American October sales is at an estimated 45,000 vehicles. That was a 25% drop from the 60,000 sold in September. Now, we never expected October to be equivalent to September, although I said I thought we'd have carryover from the people who bought near the end, and it might be a strong month. Well, if it's only at 45,000 vehicles, that would not be a strong month, but this is an estimate. I'm not sure we know. We'll see what happens later. The expiration of the U.S. federal $7,500 purchase tax credit helped September sales, with buyers looking to get the benefit before it was gone. We expected to see the payback on U.S. October deliveries after the Inflation Reduction Act credits ran out, according to the article. However, foreign markets, this is Langdon continuing, however, foreign markets continue to show weakness, which leaves a downside to fourth delivery estimates. Wall Street currently projects fourth quarter Tesla deliveries at 440,000 vehicles, according to FactSet, down from 500,000 delivered in the third quarter. Tesla delivered about 496,000 cars in the fourth quarter last year. So in order to equal last year, in order to equal last quarter, we'd have to be up near 500,000. I have believed that it was possible. I'm relaxing on that belief a little bit. I think anything over 400,000 is going to be good. I'm hoping it'll be as high as the street's saying at 440,000. All of this it works out to be nickels or dimes per share, as opposed to energy, which will be up for sure, maybe by more than any decrease in car sales. Falling estimates or a delivery miss might not matter all that much to Tesla shares. Tesla's EV sales are on pace to fall year over year for the second consecutive year globally and for the first time ever in China. Despite falling sales, Tesla stock hit an all-time high in December and was up of 2024 and was up about 9% year to date and up about 26% over the past 12 months, entering Wednesday's trading. I don't think that's right. We'll look in a minute, maybe. I don't know. Investors are still more focused on AI applications such as self-driving taxis and humanoid robots. There's good reason for that. It's what Tesla's board is focused on too. 3 of the 4 operational goals in Elon Musk's new pay award are focused on AI. To earn that 425 million shares, he needs to sell cars, but also 10 million driver assistance subscriptions, 1 million robots, while deploying 1 million robotaxis. Tesla stock was up 0.2% in pre-market, but as I mentioned, down strongly after the market opened. Shares of the e-maker have been listless since the company's November 6th annual meeting, when investors learned that shareholders voted in favor of the CEO package. So some people thought we would have FOMO into the meeting and then have a sell-off on the news. Other people thought we would do okay going into the meeting and then have a bump after the news. What we had was listless into the meeting and listless after. And my $500 is or 480 or 488, whichever one you want to use. None of those are quite there yet. We have to see what happens over there. I don't have a new date yet for that number, other than definitely by the end of the year if we take the driver, the rider, the safety rider out of the seat. That's going to be, as Gary Black said, I agree with Gary on this one, that's going to be key. This is Randy Kirk, in case you've forgotten, after I was kind of not very much around for the last few days. And I'd love to have you join Patreon. I'd love to have you. Oh, yeah, I need to give you guys a deal on the book if you join Patreon. I will do that later today or tomorrow for sure. I'll start letting you know what you can do to get a free book. That'll be later today or tomorrow, probably tomorrow. And interesting, I did a Grok search. This is an interesting quick fact. Did you know that 22% of all consumer spending comes from Social Security, government medical payments, pensions, and welfare? So this is an underlying base to the economy, 22%. Another 3.4% is government paychecks across all, U.S., federal, state, local, et cetera, government checks. I think I have to double check this one on Grok. I didn't have time, but 3.4%. So we'd add that to the 22%. You got 25.5% of the overall economy that is never going to change. It's a base. It's nothing going to happen there. But on the other side of the coin, we have ADP now, because of the government shutdown, is giving us this weekly update. They said their average weekly job changes, private sector employees, of course, only, shed an average of 11,250 jobs per week over the 4 weeks ending October 25th. And then the estimates track week-to-week job trends through late October, focusing on the second half of the month when hiring momentum reportedly started to falter. This marks a slowdown compared to earlier in October, where job growth was stronger and front-loaded. Now, if you take that entire 44,000 jobs over 4 weeks and you subtract it from the 44,000 jobs that ADP said had happened, you would have 8 weeks of zero. So I wouldn't be shocked at all by that. The markets seem to be a little shocked by it. If it continues into November and you've got another 44,000 negative over the first 4 weeks of November, then I would say that's getting a little negative. It's getting a little soft. My guess is that it won't, okay? And that will continue to be around zero, plus or minus 20,000. That was my number. You may remember, I've repeated it often, will be around zero, plus or minus 20,000. National Federation of Independent Business People this morning, the index declined 0.6 points in October to 98.2, but remains above its 52-year average of 98. The uncertainty index fell to 12 points. So the folks are feeling more certain about the future. That's the lowest reading of the year. Optimism among small businesses also declined in October as owners reported lower sales and reduced profits. So maybe they were saying that they're more certain, but they're more certain that things are going to be bad. No, I think what you got is you've got meh. You've got things are fine. I've been talking about this for a very long time. Let me say it again. Small business owners, people that they're talking about in this group, say from 500 to 50,000 employees. I think that's the small business group now that they're covering in this. And it could be even mean people with less than 500 employees. These people are old. Okay, I mean, they're 45, they're 50, they're 55. They've been doing this for a very long time. Their businesses are stable. This is not a bunch of folks. This is not the startup world, okay? This is the solid folks who they own their home. They've got plenty of money in the bank. And what happens month to month is not big deal. Now, may notice, and we'll talk about it maybe in a minute. Well, we probably won't, that the Russell is up. The Dow is up the last couple of days. So we are getting a little bit of a movement into these kind of stocks. In conjunction with the October report, NFIB also debuted a new podcast, Small Business by the Numbers, if you want to check that out. All right. Key findings include 32% seasonally adjusted of all owners reported. Now, wait for this now. Also reported job openings they could not fill in the current period. The last report was 32%, so it's going up. I'm sorry, no, the last time unfilled jobs opening 32% was in December 2020. This is the highest it's been. Unfilled job. They can't find people to do the jobs they need done. So we look at the fall off from ADP in the number of people employed, or the number of new jobs rather. We really need to look at the other side of it, which is the qualifications for the people that are coming into the market. In October, 27% of small business owners cited labor quality as their single most important problem, up 9 points from September and the highest level since the record of 29% in November 2021. Labor quality ranked as the top problem and was 11 points higher than taxes, which rated second. Do you notice nothing in there about inflation, nothing in there about tariffs? Job performance, people that they can't find enough people to do the jobs. Labor costs reported as the single most important problem for business owners. That fell by 3%. That's really good, from 3 points from September to 8% seasonally adjusted. And that 26 did report raising compensation, down 5 points from September. A seasonally adjusted debt, 19% plan to raise compensation in the next 3 months, unchanged from September. In the business earnings area, we have Advanced Micro Devices, which is being purported right now to be the reason the markets overall are up this morning. And their shares popped more than 6% on the heels of CEO Lisa Su saying that the company anticipates total market for artificial intelligence data center parts and systems will reach $1 trillion by 2030. She also said the company should see its overall revenue growth increase as a result of an insatiable demand for AI chips. Elsewhere in tech, NVIDIA shares rose more than 1% after Foxconn, one of its suppliers, reported a 17% year-over-year increase in earnings. Both NVIDIA and AMD have come under pressure after Tuesday's session because of and Oracle, because they were swinging lower in the previous session. It reflects the uneasy sentiment among investors that tech valuations could be too stretched. But now we keep getting these earnings analyses and not so stretched. The president of the United States is being blamed for the current economic situation for those making under $100,000 and therefore is sitting at 45% this morning. Truflation, the number is still sitting up around 2.55. Goods are up 2.87, which is pushing this number up. Core is down to 2.2, services down to 2.44, and PCE sitting at about 2.61. All right, so what does that mean for markets this morning? AMD growth is up now 10%. Okay, let's go over and look at Tesla first. Still down this morning at 432.80. Now, maybe it was the article that called people's attention to the difficult sales environment that Tesla had for October. But anyway, it's down 1.47 with the NASDAQ down 0.32. So part of it is the NASDAQ being down 0.32. So the overall tech thing is still a little bit nervous. We've got the Dow Jones up 0.8. We got the S&P up 0.02. So, and both of those coming down. So maybe Tesla was just front running the market this morning. I don't know. Again, that was the only news that I know of. Maybe you can tell me in the comments if you think something else is impacting Tesla this morning. We've got the Magnificent Seven all down, and it's like Apple 0.74, Google down 1.56, more than Tesla, Amazon 1.17, Meta down 1.9, also more than Tesla. So maybe this is a continuation of the tech sell-off. And NVIDIA, though, only down 0.32, Microsoft down 0.66. The VIX, however, while it's up a little bit this morning, sitting at 17.49. So it has relaxed back down into kind of a normal territory there. Not really risk on, not really risk off. We've got Cathie Woods all down this morning also, but mostly in the less than 1% change, other than CRISPR and TDOP, which always seem to be very, very a lot of ups and downs in those two stocks. All right, what about my favorite, the bonds? The bonds are down 3.9 basis points this morning to 4.071. This has got to be due to a lot of the things that you're hearing about with the jobs report, et cetera. And so I think, as I've said before, okay, well, I think I'm ready for a new prediction. By the end of November, we're back in the threes. As we go into December and the next rate cut, we will be back in the threes again, 3.95, something like that. So that's a call. We've got the oil down 1.83 to 59.21, probably the same thing. Natural gas, though, $4.57. Mr. Trump, President, we need to do something about natural gas. I know it's helping U.S. industry. I know we're selling tons of it to Europe. Europe has now switched a huge percentage of their natural gas from Russia to the United States. A great thing for America, but we have to protect the folks, okay? And this is not good at 457. Gold is up 55.90 this morning at 4,172, and silver up 3 times gold, up 3.30% to 52.42, well over the $50 number. Again, copper up 1.45% at $5.14. As mentioned, long term, I'm expecting copper to do extremely well. Articles out last couple of days talking about the long-term potential for copper in positive direction. The yen slips to a 9-month low. The dollar edges up. Bitcoin, that's a headline. I'm just reading you the headline. That was not my analysis. That was a headline. The Bitcoin up 582 this morning to 103.4, staying way down in the bottom of its trading range. Ethereum up 1.13 this morning, 3,479, also in the bottom part of its trend line. Okay, so there you have it. I'm back. I will be back later today. My hope is that we'll have Brian Wang and Jeff Lutz, though I haven't talked to them in days, will be your two co-hosts as we get around 4 o'clock, 5 o'clock, and then maybe 7:45 for Jeff Lutz. Those I would expect, if they are able to come on tonight, will be amazingly, incredibly good. There is nothing in the past for me to point to, as I haven't done anything for days. Good to be back. Please buy the book. Go down below. I will. Of course I will. Yes, tomorrow morning, I will give you the deal that unlocks a free copy of the Audible version. You've been waiting for that, haven't you? Okay, well, we'll get it done tomorrow. It has been great, as always, talking to you.